All right, everyone. This is Fjord, and I am here to present Main Street Apartments in Warrensburg, Missouri, a deal that my partners and I currently have under contract about 45 minutes outside of Kansas City. It is a total of 64 units built in 2004. And yeah, it's a 506B syndication investment, which means you have to be established as a person who has a relationship with myself, my wife, or one of my partners in order to invest. So this is not for advertising. It is a private investment available to only people that we know already. All right, let's kick it off. So this is the disclaimer. So yeah, just some privacy, general disclaimer, financial disclaimer. None of this is projection, or all of these are projections. None of these are promises, so on and so forth. All right, and so the management team for this project is myself and my beautiful bride, Megan Fjord. My partner, Charlie Peters. I believe this will be our seventh deal that Charlie and I will have done together. Colby Carlson running asset management and doing some investor relations, as well as Samuel Passanisi and Sam Passanisi. You'll probably recognize several of us here on the team. Someone would have invited you to receive and review this video on this team. If not, then please feel free to reach out to us. We'd love to be able to meet you in the future if we don't already know you, but you can't invest in this deal. So the general partnership has over 200 million assets under management, decades and decades of experience in real estate sales, property management, construction management, so on and so forth. So very qualified team, not our first rodeo. All right. This is something we actually do take very seriously, our mission, and we read it off in every one of our major corporate meetings. We purchase poorly managed, underperforming apartment complexes and implement professional business practices to improve the living conditions in our communities and increase the quality of service provided to our residents. By transforming our apartment complexes into safe, high-quality homes, we drastically increase the value of our properties, providing substantial cash flowing investment opportunities for our partners, you guys. The tagline we like to focus on is we create value for everyone we work with. All right, so the top line basics of this property is we're purchasing it for $7.5255 million. That's roughly $117,000 a door. We plan to own the property cash flow for the first 3 to 4 years and then refinance out 100% of the original invested dollar, the $2 million. We intend to return in a refinance somewhere between year 3 and year 4. The total equity multiple for the project over a 10-year hold period is 2.9x. This is a B class property, 2004 construction with 2024 roofs. And by the way, it is also 506B syndication, 60-40 split, 40 to the general partners for doing all of the work and signing on the loans and all of the things that we do, and 60% goes to the money. And that is after a 8% preferred return until the full return of member capital occurs, and then the pref goes away. We are fixed on our loan for a total of 5 years in the initial hold period at 6.6%. The average annual return projected for this deal over the 10-year period is 19% average annual return. We have a total CapEx budget of $550,000 for the property, which we'll go into detail about what that looks like. And then this is a rapidly growing population for the Midwest. It is 45 minutes to an hour outside of Kansas City in a town called Warrensburg, Missouri, where the University of Central Missouri is located. Lots of great things to talk about there as well, on top of just the university. The median household income is 67,000 a year, a little bit more than that. So, those demographics and those numbers are really important in determining where we choose to invest in real estate. The basics of the asset itself, it's 64 units. The average in-place rent as of now is $1,121 per unit. The average square foot is a large 1,094 square feet, and that's because 63 of the 64 apartments are 3-bed, 2-bath units with in-unit laundry. You're going to see the floor plans later. They are beautiful. Big, beautiful 3-bed floor plans. 2004 construction. It is currently over 95% occupied, has brand new 2024 roofs on it. It's has an amazing location. The location is what you really buy when you're buying real estate. It's 1 mile to the elementary school, 2.2 to the middle school, and 3.5 to the high school. It is 3 miles away from multiple large employers, most specifically a 1.2 million square foot Dollar Tree distribution center that was just completed in Warrensburg in 2023. So yeah, more jobs equals higher demand for rental properties. It is 12 miles away from Whiteman Air Force Base, where the B-2 bombers are based out of. And we love that because it is a huge multi-billion-dollar stable base for the community. Total of 17 buildings and one leasing office in one of those buildings. They are all electric and all individually metered for everything. Water, sewer, everything is individually metered. So that keeps our expenses down. You're going to notice the expenses on this property are very low. And plenty of parking. There's 2 spaces for every single unit on site. So we're moving along a little quickly. I'm going to try to slow it down a little bit. The features and amenities of the property are that it has an on-site office, which is not necessarily regular for a property of 64 units in size. Every unit does have full-size washer dryer hookups there just off the kitchen area, as you can see. They also have central heat and air, ceiling fans. It is directly next to the university. That's the University of Central Missouri. Closets are huge, great for roommates, as well as people who like to have lots of clothes. I know I'm one of those people. Yeah, little private patio off your front door and off-street parking. We will be installing brand new storage lockers in what used to be a pool room. I'll show you some pictures and details of that here shortly. All right, look at these exteriors. They're so clean. The brickwork is in fantastic condition. These decks, these Trex decks, are brand new. They were put in last year. They tore off the old decking, all of the old supports and everything, and started from scratch. They look beautiful. They're going to last for many, many, many years. And they were built very, very well. I've got nice green spaces in the community. As you can tell, there are a total of 17 buildings. This is the little building that used to be an indoor pool that we're going to actually build storage lockers in. And by the way, it's located next door to an A-class student housing project. So it's a great area, even though students aren't our main demographic, but we are in that area that is close to great things. So this is what an interior looks like right now. And we don't plan on doing a ton more than what you see here to the units. You'll see that here momentarily. Floor plans are great. You've got an open kind of dining, kitchen, living situation going on here. Nice open bedrooms and 2 full baths. Investment summary. Minimum investment is $50,000. There's an 8% preferred return during the initial 3 to 4 year hold period while we have the equity still in the deal. And then once the equity is returned, the pref goes away. AIR is projected at 19% annually over 10 years. We're buying it for $17,525 or $117 a door. We are looking for funds in this is actually a little late. It's a June 31st. The end of June is when we're looking for it, not June 1st. Distribution, we'll be doing a distribution 3 quarters after we close. And our total raise is $2 million. All right. In our CapEx budget, you'll see in detail here what we intend to spend on the units. So we're going to spend on 43 renovations, $9,825. I think we can do them for less, but that's what the numbers, that's what we project the cost to be conservatively. We have a budget for replacing those HVAC systems that are a little bit out of date. Several of them on site at the property, are at the end of their useful life. So we wanted to make sure to budget for that. Then we are going to be building out the storage lockers and providing those to the residents, a 3 foot by 3 foot by uh, we'll call it like 7 feet tall storage locker for each one of the residents. It's going to be a great added amenity. So the per unit cost detail breakdown right here. So what are we going to do with the money? We are going to take these units. There's 43 of them that look like this, a little bit dated. And we are going to simply paint the cabinets and put new countertops on, and then replace the vinyl plank flooring and paint the walls. That's it. Simple, easy stuff. Don't have to spend a lot of money to get a big bang for your buck. In the current empty storage building that has just a bunch of junky appliances lying around, we're going to be installing prefabricated cages there in that area, and we are going to be able to have enough for every resident to have one 3x3 storage cage in that storage room. Bathrooms will get an exactly similar update to what the kitchen gets. We're just going to be painting cabinets, floors, painting walls, and that's really about it. Basics. Don't have to spend a lot in order to get a lot. All right, here's our financial projected projections in an easily discernible model. So this is what a $100,000 investment would look like into this deal. You have $100,000 invested into the property. In year one, we project around a 6 to 6.5% distribution, or $6,000. Year two, we're looking at around $9,500. Then a preferred return, or then the principal payments start kicking in. So that's why this payment starts going down, as we actually start paying down some principal on the property. Somewhere between year three and year four, we will then refinance the property, returning 100% of the original invested dollar, giving you the opportunity to redeploy your capital after year three into any investment that you want. And then guess what? We just keep the property. After the fourth year, once we do the full return of member capital, the cash flow does go down because we have now placed a solid amount of debt on the property, but you have gotten your full original investment back and an 8% preferred return. So you get years 4, 5, 6, 7, 8, and 9. Cash flows look like so on and so forth. Year 10, we project a sale and a combined distribution from the sale as well as the cash flows in year 10 is $140,000, which would result in a 191% return on your dollar over a 10-year period. There is a capital transaction fee, acquisition fee, and asset management fee along with the deal. Now's a good time to talk about that. We do take a capital transaction fee of 2% of the value of the property at the refinance, as well as a acquisition fee of 2.5% when we acquire the property, and one at the disposition as well. All right. So in numbers, so you got a $100,000 investment. You've got your returns scheduled out here. This is the exact same thing we were just looking at earlier. The only difference is that it has a nice, pretty spreadsheet. All right, sources and uses. We're borrowing 6.464 million. Then we are raising from out of the friends and family 1.45 million, and we, the general partnership team, are contributing 5.5 million of this. And then we're going to buy the property. We have closing costs and fees, $500,000 in capex. We have $64,000 in reserves for a total of 8.4604 million. All right, we have a detail all the cash flows, our expenses, and income. At the end of the day, if you focus on just the top line numbers, we believe will go from an in-place NOI, which is actually NOI, which is actually lower than what the current seller is achieving. We believe we can distribute out a full $143,000 in the first year. So you've got income, you've got expenses. So you've got effective gross income, you've got expenses, and then NOI for cash flow after we pay our mortgage. All right. So in year 3, we believe we'll be placing an agency loan on the property, call it Fannie Mae loan, that'll amortize for 30 years. We believe that the value of the property will be based upon a 6% cap rate because of the age and location. So all in all, it should result in a return of the entire original investment plus 20,000 back to our investor partners somewhere between year 3 and year 4. All right, rent comps. So there's only 2 unit types in the entire complex. There's 1 beds and there are 3 beds. So there's only 1 bed at the entire at the property. Main Street has 1 700 square foot, 1 bed, 1 bath apartment, which is actually larger than the others. This Meadowbrooks property, which is just down the street, has a 612 square foot unit for $935. So are we going to go for more than 800, which it's already currently getting 800? Yes, we're going to go for more like, 850. But that's where it is as it stands today. Now, 3 beds. The 2 other comparable properties that have 3 bed, 3 bath units and are on or around 1,000 square feet are Meadowbrooks and Opera House. Those both rent for close to 1,500, but yet our top line rents are only achieving $1,295, and our numbers are based upon achieving $1,325. So we believe we can hit $1,325, even though the comparable neighbors are getting almost 1,500. All right, main market overview. The property is located right here in Warrensburg, Missouri, which is about an hour from downtown Kansas City, or about 35-40 minutes from Lee's Summit, Missouri. Great location off I-70 heading east from Kansas City. It's also directly next to Whiteman Air Force Base. Oh, and there's a Dollar Tree distribution center that just got built, if I didn't mention that earlier. Current population is almost 35,000 people. 50% of the people rent, 48.6, and employment is very high, low unemployment. Annual population growth has been 2.4%, which is really strikingly high for Missouri. We like to buy properties in areas just like this, in places where the population is growing and where tenants are living. So population growth equals higher demand for housing, equals higher rents, equals higher values. Oh, and the median home value is almost $200,000 within 1 mile of the property. So the barrier to entry in order to buy a home is much higher. And we think that that will drive higher demand for rentals in the area. And median age in the area within 5 miles is just under 30, 29. All right, let's talk about where all of our tenants work or earn their funds in order to be able to pay their rent. So we're an hour outside of Kansas City. You can commute to Kansas City or Lee's Summit, which many people do. But let's just talk about things within a more reasonable distance. You have Whiteman Air Force Base creating 7,500 jobs in the area. And then the University of Central Missouri coming in second at 1,278 jobs. And we are, of course, directly next door to University of Central Missouri. Intersys, which is located about 2 miles away from the property, has 659 jobs. Then you have the hospital, Dollar Tree distribution center. There is also a giant Walmart and Lowe's right down the street. So, we are usually employing, or our target demographic for this property is people who are working in these places, not students, even though we do have some grad students that live at the property. Most of our community residents will be people who work at one of these companies or are directly supported by one of these organizations. All right, let's go back over the investment summary. We're seeking a total of 2 million at 50,000 minimum per investor. There is an 8% preferred return, which means the investor's capital receives 8% before the general partnership begins to earn a return on their time and effort and risk of signing on the loan and managing the property, so on and so forth. In year 3 to 4, we will do a refinance that will return 100% of the investor capital and remove that 8% preferred return, in which case it just switches over to a straight 60-40. The annualized projected return, and these are all projections based upon a 6.75 cap rate sale, is 190% over 10 years, or 19% average annual, or 2.9 equity multiple. These are all the detailed assumptions. This OM is available on our cash flow portal for you to review if you want to read all that in detail. Additional things that we plan to do is a cost segregation study in order to be able to take advantage of bonus depreciation and accelerated appreciation at this particular property. That's exceptionally valuable, considering that in year 3 to 4, you get back your original investment, don't have to pay taxes on that, and also don't have to recapture any of the depreciation that you took this year on this year's taxes. All right, the investments process is pretty quick and easy. Got to go to cash flow portal, review your documents. In there is the details of the deal in the cash flow portal link, as well as a copy of this offering memorandum and the full investor docs for you to review separately before signing. Then you got to e-sign your documents. After you do that, you can fund your deal either through ACH or you can send it via wire. And then we intend to be closing on or around the first week of July, call it July 9th. As of right now, if we had a target date, we want to get closed right there after the 4th of July. All right, frequently asked questions. What's the time horizon? We're looking to close in July. First week in July, and hopefully we have all the funds in place prior to that, so then we can go ahead and move forward to close. If not, we do have 2 15-day extensions. How will profits be distributed to investors? There's an 8% preferred return that has to be hit in order to be able to meet the 60-40 split promote between LP and GP. After the full distribution of the investment for the 100% return on member capital, that 8% preferred return does go away, and it switches to a straight 60-40 split. How much are the general partners contributing? We're contributing $550 of the 2 million, so over 25% of the money comes from us. Might even be a little more. There's a few of us that have taken into consideration adding to that investment. So what are the investor requirements to invest in this deal? Only if sophisticated and accredited investors can invest in this opportunity. It is a 506B syndication, so we can take non-accredited investors, but we obviously do have to have that pre-established relationship with you. So hopefully we know you well enough and we have established relationship ahead of time. If not, then we'll have to wait for the next one. The minimum investment is $50,000. The next question is, can I invest from an IRA? Yes, we take solo 401k and IRA funds, of course, and we always recommend IRA Club for that. They're fast and due diligent. Happy to give a referral if you need one. All right, is due diligence complete? Yes, we completed our full due diligence at the property. And we are at a place now where we're just full-fledged moving forward to closing. We've already been pre-qualified for our pre-set and terms agreed to with our lender. So due diligence is done, and as well as lender due diligence. All right, so at this point, it is time to refer to the link of the deal and go into cash flow portal and start that review process and e-sign process. If you have any questions about how to find the portal or links to it, please just let us know. That is private information. Please reach out to us directly. We will make sure you get in there to be able to review and sign your documents. Appreciate your time. Reach out with any questions and we'll go from there. All right. Thank you.